In the currency quadrant today, taking a look at the June Japanese yen, which just completed its second week lower. The yen is now down over 3.5% in the last 2 weeks. When we look at the day's performance, down a little bit less than 0.5% at settlement. We were actually down almost 0.7% on the low. 83.90.5 was the June Japanese yen low. On the high side, we were only up just short of 0.1%, 9 basis points at 84.56.5. The yen actually had a lower close every day this week except for Thursday and is now down 9 of the last 10 sessions. We had a Bank of Japan decision overnight, and that's part of the reason for the weakness. Unlike other central banks, the Bank of Japan is maintaining ultra easy monetary policy. In one of the more interesting comments that came out of the post-decision press conference, Bank of Japan Governor Haruhiko Kuroda reiterated his view that even if inflation were to reach 2%, it would likely prove just temporary. He didn't use transitory, he used temporary. And this is a quote: "Inflation is driven by costs rather than demand, and so the BOJ will continue easing to support growth." That's probably not like other central bankers' views, but it is the view of the Bank of Japan right now, and that's all that really should matter in terms of how that input comes into trading the Japanese yen. Now, in terms of data, Japan's tertiary index missed while inflation remained unchanged. The index came out at minus 0.7 versus last month's reading of up 0.4. And as I mentioned, inflation was completely unchanged. So on the data front, a little bit of yen weakness there as well. Overall, yen has been very weak and seems to be staying in that downward direction.